Happy Friday, traders. Wow, what a crazy 24 hours. It's had everything. It's had something for the bulls and it's had something for the bears, but we are firmly in risk-off trading at the moment. So look, it all started yesterday after market close when we saw third quarter earnings for NVIDIA, which obviously was a huge market focus and super important. Those earnings came out and blew away expectations. On paper, they were fantastic earnings. NVIDIA went off to the races. So after hours, it was up as much as 5%, and it dragged the Nasdaq up a whopping 700 points. And risk across the board was obviously helped and was bid pretty much all the way until the US Open. So it was just after US Open, things started to turn sour. And so we had a big turnaround in NVIDIA, which was up over 5% in the US Open, which then ended up down, almost down 3%. So it's like an 8% turnaround in NVIDIA. It's a $5 trillion company trading like a meme stock. But yes, look, obviously and the broader market went with NVIDIA as well. So we had Nasdaq ended up down around 2.5%, S&P down 1.5%. So what happened? A lot of traders scratching their heads, thinking, geez, didn't expect that. So look, there's a few things in play here. One is that the questions about NVIDIA, its accounting, just how it ends up with these fantastic earnings just won't go away. Obviously NVIDIA basically owns and has big investments in a lot of its customers that buy from NVIDIA. So like NVIDIA is its own biggest customer. Obviously you got Michael Burry, a famous hedge fund manager, who is short, says it's a bubble, and the accounting is all wrong. So yes, that is one of the things that still will not go away for NVIDIA. But a few other things that are in play for the market and have been in play as well. One that we've talked about is the fact that the market was expecting that the Fed would be cutting rates again in December. That now has changed. From being pretty much a slam dunk down to now Fed Fund futures around 39% probability for a rate cut in December. Markets love rate cuts, not getting them, they don't like that. Overnight we did actually get some data out. That was the US employment data for September, which was delayed because of the US government shutdown. Market was expecting plus 50,000, unemployment rate of 4.3%. Headline number came out, double expectations, over double, 119,000. So big surprise on the upside, but the unemployment rate did go up marginally to 4.4%. But look, that certainly is not an employment market that is going to warrant a rate cut in December. So it didn't really change the scoreboard on that front, that data overnight. But look, one of the other reasons that potentially this market is selling off and it's nervous is coming out of Japan. So recently they just had a change of government. New government now has implemented a huge stimulus package. Now with those stimulus packages, they are inflationary. You've already got inflation that is sitting above 2%. You've got a BOJ policy rate of only 0.5%. So the feeling is that these guys are going to have to raise rates soon. The next meeting in December is going to be a live meeting. But already what we're seeing is the bond market is selling off in a big way. 10-year JGBs are currently at trading above 1.8%. It doesn't seem like a lot, but for Japan that is huge. That is a 17-year high now for those JGB yields. One of the things that has kept markets, one of the reasons why markets, and one of the big reasons were able to trade at record highs and be bullish for so long is because of the carry trade out of Japan, is that the market was able to basically borrow money at zero rates and then reinvest that, chasing AI and chasing the tech all the big tech names. But now, with obviously rates going up and these yields spiking the way they are, that carry now is expensive. The maths doesn't add up anymore, but it also means that potentially that we're going to see an unwind of that carry trade. There are suggestions, but the size of the carry trade could be upwards of $20 trillion. So if we do start seeing an unwind of that, that could hit markets very hard. Obviously, at the moment, the yen is depreciating, so dollar yen is up near 158. But at some stage, if dollar yen does start trading lower, and then that carry trade will start to unwind maybe faster. So got to keep an eye on these things, and also Bank of Japan also been verbally intervening in the market with respect to the yen.